Okay, the 14th.
Unfortunately, or should have to wait 13th as new holdings in Lennar LEN, DHI, and Lamar LAMR as well.
Buffett's dead, or almost dead. Why do we care about Berkshire anymore? Let me shut some of this down. Senga! What's up, Adrian? Senga! What would be a flow show webinar without you, Adrian, and a high Senga to start it off? There's gonna be a day, a Thursday, where I don't get a high Senga out of you. I'm gonna feel lost. All right, you got a few of these 13Fs coming out. Just a reminder, you're looking at old information there, but you do get some excitement initially, some of the bigger names. All right, if I need anything else here, I'll post it along the way. All right, you guys see anything interesting out of the 13Fs? I didn't really get a chance to look at anything. What was the big Buffett name that everybody was trying to figure out? It was UNH? What's up, Papu? UNH, Lennar, DHI, Nucor. That sounds like Buffett names. Home builders, yeah. Right? But again, Buffett's not there anymore, right? So, I mean, they still are practicing the Buffett method, I guess. All right, let me mute a couple things here quick. Yeah, I'll take a peek. Any R names, Matt, in that we've seen notable flow in over the last few months? Well, UNH, we saw some of that longer term buying, but Buffett's not really, they're not really an options group. But you got to think back, like with 3 months, right? They AI cloned Buffett's brain. That's probably what they did. All right. Let's get rolling here. And I know I say this, I think I say this every other webinar, but no reason to keep you guys too long today. I think we could get to the nitty-gritty here rather quickly. We'll talk about a few names, and then we'll call it a night. It's funny because this week I was pumped up I was kind of getting pumped up last week for this week, being that we got through the heart of earnings season and the action was going to clear up. I was excited to see what names would start to see some post-earnings action. And for whatever reason, it totally slipped my mind that this was OPEX week. And that's a bigger disaster for the flow than even earnings. So kind of rained on my parade right quick. And the reason I bring that up early on here is because I was looking forward to this Thursday webinar. We get to talk about the action and some names. And there really isn't much to talk about. We'll go over some things, but as far as new action and names, you got to kind of take with a grain of salt anything you've seen out there this week, because the majority of names, especially in this rally, caught August buying. Those August positions are sitting in open interest. They need to get rolled out and replaced. And that's pretty much what we've been seeing all week. Even some of the under the radar names, because like sometimes you get a couple of unusual activity type names that they don't have August exposure. And at least you got a few names, but even some of the under the radar names have August positions that were expiring. So not really a lot to talk about on that front, but I think a few interesting things big picture wise to kind of put things in perspective. And if you guys remember, one thing I touched on kind of the last few webinars, because it's a problem I fall into. I see a lot of, again, not you guys specifically, but a lot of younger new traders fall into the same problem. When you have a bullish backdrop, right? When kind of all the signals line up for bull market type price action, right? And you got things going in that direction, you don't want to get too cute, right? We had that discussion, right? You don't want to all of a sudden start micromanaging each and every tick, each and every move. Eventually start, looking at trying to analyze every move on a day-to-day basis. Then that turns into an intraday basis. And then you kind of F up your big picture, right? Which is the most important thing. And again, maybe some of you have a different perspective, but for me, I think the most important thing for me to find success in this game is when it's a bull market, for me to be bullish and get long stuff and sell it higher. Plain and simple, right? And when it's not a bullish environment, to kind of rein it in, try to find the discipline to not force trades when there shouldn't be any, and wait for that bullish environment to show up again. Plain and simple. Right? It's nothing any more complicated than that for me. All right? So when you have those signals lining up in a bullish way, okay, I want to find stuff at decent risk reward spots and entries to buy when it catches aggressive sweeper activity. That's my confirmation signal. You may have others, those of you out there. Okay. I don't want to get too sloppy, especially later as the rally gets a little bit longer in the tooth. But that's the gist of it, right? I don't want to try figuring out what tomorrow may do or what it may do this week. Or you understand what I'm saying? So we had that conversation, and I bring it up again because kind of a reminder of not to get caught up in these day-to-day gyrations of CPIs, PPIs, MEPIs, and these PIs. If you have the confidence in some of the things we look at week in, week out, you got to try to ignore a lot of that noise, right? And that's the toughest part, ignoring the bulk of the noise that's out there. It means something on a day-to-day basis, price action-wise, big picture-wise. It really, very rarely has an effect, okay? So that being said, we've had an interesting week this week where you kind of had a CPI come in softer than, they were expecting a really hot number out of the CPI. It didn't come in hot. So anything outside of a hot number, you were going to get a bullish reaction. And that's what we got. But honestly, I didn't think it was going to be as bullish as it was. You had full participation. I thought it would be more rate cut sensitive, and tech would rotate out of tech and go into that stuff. They did that yesterday. And then today you got a hotter than expected PPI, and you kind of saw the opposite of that for most of the session, right? So it's pretty much what we've been seeing, right? You've gone from a rally early on here where, again, you go back to the liberation lows back in April, okay? Nobody has any exposure to equities, and there are major parts of the market that are aggressively short, okay? as that unwinds, that's where you get kind of that big tailwind, that full participation, right? When you get that clean price action. We talked about that sweet spot type action where 9 out of 10 stocks are going up with the indexes. Okay. But as you get longer in the tooth in the trend without a correction and correlation, right? We were talking about that as correlation comes down after being high. When you get to the low correlation, you start to get more of this kind of constant rotation, right? So there's a bullish action where for 2 days you get the NASDAQ and S&P 500 outperforming, and the industrials and the Russell are down on some of those days, right? We've seen plenty of that. We saw that today. And what I think we're going to start seeing more of is the opposite of that, right? And we'll talk about that and the reasons why. But I think we're starting to see we saw a lot of that tech outperformance for so long, right? And it may come gradual because of the Fed and Powell not cooperating, I guess, as Trump would want them to, okay? But I think we start to see, even if it's gradual, an unwind to that, okay? Not that tech is going to fall out of bed. I don't think it's going to be a 2099 into 2000 type setup at this point where tech blows up and all that money starts to rotate. I just think you're going to see net outperformance from other parts of the market, a lot more of that as we go forward. Okay. And the reasons why is, if things continue in this way, you are going to start to get more stimulus from parts of, again, the Fed, the government, the economy, whatever it may be, that these other parts rely on, right? What we've been dealing with throughout most of the bull run since the 2022 lows, it's been AI has been the only exciting place to be, right? That's the only place we could find growth in the market. Anything economically sensitive, anything tied to interest rates, any names that rely on credit, right? Smaller companies, nobody wants anything to do with it for good reason, right? There's not any crazy growth economically, right? Rates have kind of been range bound, so the companies that rely on credit aren't going to get bid up. So I think we're already globally, we're already seeing that process unwind, okay? Because other central banks have already started the the rate cutting cycle. Okay, we're kind of the lone wolf now, where we're usually the leaders on that front, and we haven't gotten involved yet. That's kind of, I guess, where the frustration from Trump is coming into play, is that globally everybody else is cutting rates and we're not, right? So that's what we're seeing. You're seeing it more on a global scale, but I believe you're going to start to see it more domestic as well here, okay? So that being said, what's really interesting as we talk about that, okay, and this is kind of what we've seen, right? We're starting to see rate cuts, especially after the softer CPI. Rate cuts start to get priced in a bit more, right? September is still pretty much a lock as of now, but there were even, a half 50 basis point cut being thrown around, more cuts being priced in down the line off that softer CPI. Some of that stuff has been washed out today, but still the September, it's pretty much a go, okay? So as that has been getting more priced into the market, okay, and on an equity scale, we should see rotation into things like the small caps and cyclicals. Positioning wise, you have the opposite of that. Okay. And what I mean by that is the whole entire street has been bearish to small caps. They're still bearish to small caps, right? For good reason. But even bulls, okay, even people, even funds and players who have been bullish on equities throughout this rally, what they've been doing, especially of recent, is they've been hedging their book, their long book, via short small caps, right? So if I'm bullish and I'm long these Mag 7 names and AI names that have been spectacular, okay, but I'm concerned about the rally being a little longer in the tooth here, right? I kind of want to hedge that off, right? That's what hedge funds do. They're hedging by shorting the Russell, by shorting small caps. And you see that in the futures market. Okay. So what you got going on now is if we're going to get a rate cut in September and any other signs, right? I'll give you an example. Okay. Today you got the PPI, you had the opposite of that. But let's say you get a job number coming up, or you get the PCE that comes in cooler than expected, or jobs come in and show a little bit of a crack. You're going to get more rate cuts priced in, right? What do you think happens to that offside positioning I just mentioned? Right? So now you got more rotation into the cyclicals and small caps, but you got a pretty aggressive short position in those small caps, right? So that needs to unwind. Now it doesn't have to be like everybody thinks short squeeze these days because the GameStop, everyone thinks it has to be one big kaboom. It can happen that way, but it also could be a gradual process, right? Little at a time. Regardless of which way it comes, I think that's the most important thing on the positioning front of things, especially now that this rally has come a long way from the lows. You know, a lot of times you're at this point and you got nothing left positioning wise. But that's, I think, the big important thing here. Okay. And again, it's not my opinion, all right, that I think there's short exposure in the small caps, or I think hedge funds are shorting the small caps. You see it in the data. All right. So we're going to get another update tomorrow, as you guys know, right? We call them Sharpies every Friday, the CTFC data. And this is what you're looking at here. Okay. This is just in the Russell 2000 futures, right? This red maroon line, that's hedgers, Sharpies. This green line are hedge funds, right? So you can see here, especially of late, as this rally has stretched out, okay, what hedge funds have been doing, they've been shorting small caps, hedging any long exposure they have in big tech or anything else they've been buying, right? Because we know net they're not long, right? As a whole, hedge funds net don't have any long exposure. They're actually dead flat neutral, right? But the makeup of that, they're long some of these tech names, these AI names with crazy growth, and the short side of their book is where? It's in this stuff, right? And that's what this is showing you here. Okay, you can see even retail or small specs, as we call them here, they too have no interest, right, in small caps. Okay, you can see 0 is the line there. They're usually long small caps, and they have no long position either. Okay, so as this closes, right, and it gains interest, that's where you're likely to see outperformance from those parts of the market. And again, on a positioning, from a positioning point of view, has been a pretty solid setup, right? Again, this is nothing new. We've talked about this. You guys know I'm long small caps. I know a few of you guys are long small caps. So this is nothing new, but I wanted to bring to your attention that up until now, and we got another update tomorrow on the future side of things, it hasn't changed yet, right? Nothing has changed. It's just been playing out, right? The unwind we've started to see play out, okay? So I think that's the most important thing. These are hedges, commercial hedges, Sharpie's net positioning in the Russell 2000 index futures. And again, you could see kind of these bands out there for extreme positioning. So you get an idea of extreme positioning based off the last, few years. And you can see it's becoming rather extreme here. And the reasons becoming extreme on the long side, again, Sharpie's hedges are just a quick synopsis on how positioning sits, right? They tell you where positioning may be offsides if it's offside. Okay, if they're aggressively long, that tells you positioning is offside in a bearish extreme way. All right. If they're aggressively hedged, that tells you there's way too many longs out there. All right. So it's just a very quick, easy look at how positioning sets up. And what this tells you is that positioning is aggressively short in the Russell 2000. All right. So that's kind of the big thing here. Before we get into some of the other things, I think that's the big thing here. And everything else, I think we want to be smart about things, right? Knowing that there's likely going to be more of this rotation and possibly the unwind of this trade is going to show up more. That doesn't mean you avoid tech. That just means you got to be careful with some of the hotter tech names, especially chasing them, okay? Because what happens is when that trade unwinds, for whatever reason, you get some economic data or you get a squeeze in the Russell, whatever creates that positioning to unwind, you're going to see selling in a lot of those names, right? You're going to see selling in that basket of names. Now, they usually get bought sooner than later, right? But if you're chasing green, if you're chasing extended moves there, it could obviously sting. And even though it's a bullish environment, you end up losing money in a bullish environment, right? So again, you just want to be more prudent about things. And if you are looking for an entry, you rather see an entry off a pullback than chasing a lot of these names that are crowded and extended, right? So that's what I think one of the more important things to keep an eye on and pay attention to here, okay? But as far as the indexes are concerned, it's not something that is going to stand out when at least I don't think so, when it's all said and done. I just think you get more of what we've been seeing, this kind of rolling rotation that we see, right? Rolling rotation. Now, for me, that also plays a big part, as many of you in the Steam room know, big picture wise on just risk in general, right? It's hard for me to get cautious or bearish knowing that there's still extreme short out there. You understand? Like usually a market's going to run out of gas and top when there are no shorts left. Right? Not when there's still extreme short positions that need to be squeezed. Right? So that's kind of like almost everything is being based off my IWM exposure, right? My small cap position is that until that breaks out and that short offside short position unwinds, I feel like dips are likely going to be shallow and going to find buying. You understand? Once we get that squeeze, now there are no more shorts left. Then I think more than likely it's going to be a point in time where I start to dramatically take risk down. Right? And at the same time, what's going to be interesting is you're probably going to see Sharpies, which are slightly long right now, overall, combined in index futures, they have no hedges on. Okay? But after you see some of this stuff unwind, that's where you likely see commercial hedgers adding hedges and are going to be hedged. All right? And you start to see like all those pieces start to fill in once that happens. Okay, so everything kind of the way I'm looking at things just overall is stemming from kind of what I've been talking about here, right? In the overall market. I know it may have nothing to do with macro, it may have nothing to do with NASDAQ or S&P, in general, but everything kind of as far as risk is concerned, everything I'm looking at stems from kind of the small caps. And I think this falls under the same umbrella here. The equal weight. All right. So like you probably, with what we're seeing go on here, right? And if rate cuts come into the picture, you're likely going to get equal weight participation. Again, I'm not saying there's not going to be AI outperformance at times, plenty of times. There should be. That's where all the exciting growth is. But I just think you're going to get more participation from everything else, because now some of the institutional money starts to look past some of the negative stuff that's been holding them back from buying these things, right? Remember we had that discussion? You start getting rate cuts and they have a tendency to look past the next 3 months of stagnant growth, betting on a better environment in the future. Okay. And I think that's a perfect segue to what we actually seen. I didn't post the chart, right? But we actually seen institutions do some buying for the first time in God knows how long. Right? So you guys remember we looked at this numerous times where it's been retail and buyback. That's it. Hedge funds have had no interest. Institutions have had zero interest. Right? And for the first time in a long time, institutions have stepped in a pretty decent way last week. Right? And you're seeing that from, again, just more participation, more involved, right? More breakouts. You're seeing more ideas, right? Especially flow-wise in other parts of the market outside of AI. And as that continues, what we should see is that as far as institutions continue, right? And again, that's like another thing. Like institutions usually at a top have been doing a lot of buying and start to sell. Like I give an example. 2022, the start of the bear market, institutions were extremely long into late 2021 and started to sell. Like late fall of 2021, that's when institutions started to dump from being extremely long. And it carried into 2022, and they've been almost net sellers ever since. It's rather incredible. Okay, so that's a lot of buying on the sidelines, waiting to buy this stuff. Now, again, we could have been saying that for quite a while, right? Because it's been a lot of money on the sidelines, and they haven't been buying, right? But you start getting rate cuts, you get a new Fed chairman in next year, and people, these funds are going to start to look ahead towards that. Especially that there's nobody owns these things. It's not like you're buying AI names that everybody and their mother already owns. Right? There is no exposure in these things. So I think that's the appeal to a lot of these parts of the market. All right. What else? Again, as bullish as frenzious, or it definitely feels like a frenzy at times off the open, right? When some of these small caps we were talking about a couple of weeks ago get out of control, or and NVIDIA gets out of control, right? But the market, they do a good job of usually hosing that down, right, pretty quickly. Okay. But all that being said, you still aren't seeing any frenzy type reading from a lot of these indicators. You're not seeing exuberance. Certainly not seeing exuberance, right? So the BOVA Global Fund Manager Survey comes out every month. And it's really interesting because as far as sentiment's concerned, it's a great read on things. So people, when it first came out, the headlines, I started to see, most bullish since so-and-so, like stuff like that, right? To appear like, things are getting a little too hot. But, you look at where these things are at in comparison to what the market has done. And like, this is, investor sentiment rises to a 6-month high. Yeah, I mean, big deal, right? Like, you still have a ton of real estate, especially if you start getting some of the macro stuff that people haven't been expecting start to tilt your way. Okay, so you're not seeing euphoria on any of these things. These sentiment surveys, and again, I don't put a lot of weight into them, but that's where you first see heat show up. I mean, this came out today. 29% bulls. I mean, are you kidding me? That's a joke. It's got to be a joke. It's got to be a joke. And guys, listen. We talked about this, and I don't want to get into the politics of it, but I'm telling you, I think a lot has to do with the politics. I'm telling you. And I'm not just talking about surveys where people get asked. I'm talking about you got people running money who just hate Trump so much that they do not want this market going higher. You think I'm crazy? You see it all over the place. You see it all over the place. The hatred they have for this guy. I've never seen anything like this in my life. So there's definitely politics playing a big part in this, where they want this White House to fail and they want this market to collapse under his watch. No doubt about it. This, I think, tells you everything you need to know. Okay? So the dark blue line that's the systematic fund crowd. No emotions. They don't like Trump. They don't hate Trump. They don't give a shit about Trump. Right? It's all based on a system. What the VIX is doing, what SPX is doing, and that's it. Right? Those things break certain levels. They add long exposure. They break certain downside levels. They take down long exposure. That's it. No thought process. No feeling. Okay? That's the blue line. All right? So you could see into those liberation lows, they aggressively unwound a hefty long position and got aggressively short, as many of you know, we've talked about ad nauseum on here. Okay? And now are completely on the other side of it. Right? Because the market's been strong, VIX has been going lower, everything they need to see to get long. Because you're going to understand that where the systematic funds pick up the money, they make the money off trends. Okay? Because what they do is, and they usually pick it up on the long side, not on the short side. Okay? When a market rallies and starts to strengthen and they get long, aggressively long, they catch, like if there's a bull market there, a trend that comes out of it, they're going to pick up the money. They're going to pick up big money. You understand? Where they have a tough time is in a more range-bound, choppy environment. Right? But they're known as trend followers in a sense. That's their goal. Right? So they're long. They actually have a little bit of room to add, believe it or not, a little more long exposure over the next week, which is interesting because they were tapped out for like a week or two, but not much. It's not noteworthy, put it that way. But what I'm showing here is they're long, they've been long, and they're going to sit long, okay, until SPX breaks certain levels to the downside and VIX breaks certain levels to the upside, plain and simple, right? The green line, what you're seeing is the discretionary emotional fund manager buying. I hate Trump. I just can't. I can't be long and see this market and make money in this market going on. All right? Or he's going to destroy the whole world. These tariffs are going to blow up the whole world. I can't get long. All right? Or his policies are ridiculous. This market's going to have to pay the price at some point. All right? That's the green line. So you can see they were aggressively short into the lows, right? Hoping for that blow up. And right, they get squeezed, they get to neutral. What do? No, I don't want to get long. I'm going to start adding those shorts back on again. Short, squeezed again to neutral. I don't want to get long. Add short, squeeze to neutral. And that's all they've been doing. That's all they've been doing. They've spent no time net long at all. Right? And at the same time, while it's neutral, they're short out their eyeballs, small caps. Right? So while they're net neutral here, the short side of their book, small caps. So this is all you need to know of what's going on right now in this market. All you need to know. Right? There's some risk, some exogenous event or some catalyst. Doesn't have to be an exogenous event. Some catalyst creates some selling from systematic funds, right? At that point, you would probably get close to, in the vicinity of a 5 to 10% correction off of that. All right, that's kind of the risk. But you don't have hedge funds, you don't have institutions all in, and they're likely going to be buyers into that pullback. You understand? So until some of this, especially on the short side, this extreme positioning gets undone in a major way, it's going to be really difficult for this market to come in without some help from somewhere. I think the more likely scenarios you get this kind of rotation, like you get maybe like you saw what happened here, right? We got a little bit of weakness, right? We needed it. You got a couple of days of selling, and then after that, you get the bounce, and then you get the rotation back and forth, right? And I think that continues until we have a setup for kind of that legit correction. That legit correction. And that's, barring anything unforeseen that shows up. Right? I told you, very similar setup. It was a lot. You didn't have any extreme shorts anywhere. But what I'm saying about similar, I had a COVID. You had a backdrop where you kind of almost had a similar type melt up, where the market would continue to go higher, dips would be shallow, but then, COVID came around and boom, you understand? But you didn't have, I don't think the positioning aspect of things that wasn't as bullish as you had this go around here. But I'm just making the point that, if you had something like COVID show up, no matter what you're looking at here, you're going to get some flash crash selling, right? I just think that there's a lot of money that would be buying into that. Right? So that's the gist of it. Okay. I didn't want to bombard you guys with too many, like I could show you things I look at to the moon comes up later tonight, but I think those get the point across. Here's like something else, right? This is monthly flows into U.S. equity and ETFs. What you usually see before a correction, right? One of the signs you get where buy capitulation, I call it. All right, let's throw some money in the market. All right. So if you remember, like you kind of got that going into the end of last year when Trump got elected, right? And you could see it stick out here like a sore thumb. Boom, November 2024. All right. So then that's an early it doesn't mean the market's going to top out right there, but it's kind of an early warning sign, like, okay, right, they're giving in here, right? The buyers are giving in here now. I mean, the bears are giving in here now. And this is where we are now. You know, as a matter of fact, there's been more flows globally outside of the U.S. Like nobody wanted U.S. stocks. You remember the narrative just recently here? Oh, what Trump is doing. You're going to see outperformance from everywhere else. No one wants to own U.S. assets, dollar-denominated assets. Right? You hear all that negativity. Okay. Again, it's not like clockwork, but just an example going into 2022. Right? You saw something similar, right? Towards the end, and I remember it, like the last few months of 2021, you kind of had that big inflows. And you remember from COVID, like you wouldn't see any of those inflows. You didn't see that buy capitulation. You know what they were waiting for? The vaccine. Well, we don't have a vaccine yet. Well, this is not getting settled till we get a vaccine, so I can't buy into any rally, right? And that was the narrative the whole entire time. Until once the vaccine came out, all the money came in, and that was the start of a bear market. So, you know, we're kind of, we're over here, right? So again, until we see that, not to say the market can't go down tomorrow. And this is what I talk about getting too cute, right? This has nothing to do with the market price action tomorrow or the next couple of days or even a week. Right? What it tells you is that pullbacks and dips are likely to be bought. That's plain and simple what it tells us. And then when you reach a point where now you have all this exposure on the other side, all this exposure already long, okay, these pullbacks and dips get sold into, right? There are no buyers showing up into these pullbacks anymore. They're being sold into. People are taking risk off into that selling. So completely different narrative. Right. Everybody moving out of the U.S. It's, you know, yeah, I don't get, you know, into the politics of it. Honestly, I couldn't give a shit. I think it's a little ridiculous, but I'm just telling you, it's playing a big part. It's playing a big, big part out there. Okay. And, you know, retail pretty much, retail, and they've been the ones buying. Let's be honest. Right? They've been more traders than anything else, though. Right? They trade. So when you see retail at an extreme, you know, a lot of times it's in the option market. You get a pullback over the next week, and that's it. That extreme is washed out. That's simple. Right? Because they're degenerates. They're in weeklies. They're in front month. One little weekly pullback, one little digestion is done, and that's it. You see kind of all that extreme wash away. All right. So that's the story. Again, just the narrative that I'm kind of paying attention to in how I'm approaching big picture and just kind of how I'm measuring risk. Right? How I'm measuring risk. Like whenever we do get kind of the breakout of small caps, equal weight, right? That's likely going to bring in all the other stuff. It's going to bring in flows. It's going to get Sharpies hedged. You understand? That's why I think it's such a big deal. Once we see that unwind, it's going to bring in everything along with it. And that's when I'm telling you now that I'm definitely going to take down my risk significantly. You know, significantly. Now, doesn't mean, as you guys know, the market's going to top out that week, that day, right? But that is a signal for me to take down my risk, regardless of when the market tops out and starts to sell off. The point is that I don't want to get caught in that sell-off with weight. That's the whole point of that, right? So that's the story. All right. Just quickly, because I got a few questions, and I said I just get you guys caught up to date here on what I've been doing. And again, this is for anybody who's new. When I say what I've been doing, I'm not telling you you should do it. It's what I'm doing for myself. I don't manage client money anymore. It's just for myself. And again, it's people get ideas and they treat it accordingly. Okay. So I don't run a service where I'm telling people what to do. Just for a disclaimer, anybody who's new. You guys probably, if you remember, I sold the Soxel, and that actually has stormed back higher, but I'm out of semiconductors, right? So I sold it up here, little dip, and back higher, but I took off that position. I'm still in TNA. I'm still in, obviously, that IWM position I told you about. This couple decent winners recently because of these smaller names moving around. Wolf, I got a little lucky with. I added to that probably about a month ago. If you guys remember, I had runners from a year ago. I added exposure to it. Just because there's been some decent flow in it. It's been pretty active. And you guys remember, we were talking about these names just have lagged significantly, right? Bitcoin proxies, it lagged the data center AI move, just everything. You started to see other names, like APLD, Cypher, Irene, right? You started to see all these other names start to perform. And Wolf, which I think is right up there with the best of flow over the past couple of years, right? Was stuck kind of in this web here. Actually was down here when I added to it. So it was even worse. All right. So I had to hold through this kind of frustrating web. And I got rewarded with some news. The other one that I'm in is the HUT. Very similar. All right. They look identical. Okay. And the HUT, same thing. Overall, over the past a year and a half since these names started to get real action. And some of you remember a year and a half ago when we really were talking about these things, Wolf specifically, but it was the names like Wolf and HUT still to this day that really catch quality buying, quality buying. Like this HUT, when it catches flow, it's not catching speculative action. They come in with time, 9 months out, and they leave a nice dent. So I like that, for names that I want to give time to or hold. So I'm still in the HUT. I haven't sold any of the HUT. What else? Oh, Tesla. I'm in Tesla. I know. I'm not in Tesla. I'm in this. Just so you guys know. If you remember, we had the conversation that on the last webinar, we talked about the Tesla December sweeper that came in. I was kind of impressed by. Again, at the time, spot-wise, I feel you couldn't draw it up any better spot-wise. Let's look at Tesla's TSL, right? You kind of, you know what I mean? Potential breakout. They may be front-running. Now, it's December's, okay? So in other words, I didn't need to see a move soon, okay? I didn't play December's. I'm just saying the buyer was December's. So, but again, it was a different type of flow than we've been seeing to potentially change the character of the price action, right? We talked about it. If you remember, the other flow that day was Apple November's, and that thing was shot out of the cannon. Okay, so I'm still in TSLL. I haven't taken profits there. And the other stuff, I own bits and pieces of other stuff. Stuff you guys know already, like TEM, some of the longer term name stuff. This one I sold, by the way. Vivek, I sold it today. Hold on. Oh, it's my favorite symbol. SP. Where this thing closed? By the way, 450. Oh, so off the highs. I sold this thing today. I made 80 cents on it. So I figured I'd get out of it. Now, this is Vivek Ramaswamy's, I don't know what it is, okay? But there has been some flow today. This week could be rolling out August. I like the spot, and I took a shot and for a trade. Okay? So this is some of the stuff I've been doing. In this one, right? You guys know, though. This is from a couple of weeks ago or a week and a half ago. I still own this utility name. Honestly, I don't know. I'm not sure how I'm going to treat this, whether I'm just going to trade it or I might hold on to this name. I might hold on to this name longer term. Maybe sell some of it. It depends, but we'll see when the time comes. It's an out of favor utility that there's some activist players in it, and they're trying to get this thing going in the right direction, like some of the other utility names, right? And that's where the flow has been stemming up. So we've seen some flow. We've seen some decent action, decent buying come in, and the name catches news, right? Buyout news. So again, maybe get lucky with that, but at the same time, I don't mind even holding on to it. I think it pays a dividend too, for those of you looking at the equity. Okay. If you don't mind YTSL. Andrew, here's the thing, okay? And people don't understand this about me because I look at options order flow. Right? That's kind of sweeper activities where all my ideas come from. I'm not an options guy. Throughout my whole career, and you got to understand, I'm coming from a generation of equity players. Options were nowhere near as popular as they are now. But I just feel more comfortable with equity than options. Okay? So I always, if I can play the equity, right? I almost always go with the equity. Now, if I really like something, I'll do a little bit of both. Okay? The majority of the time I'm playing options is if the name is a liquid name and it's really pricey. Right? And I'll treat kind of the calls almost like playing the equity, that type of thing. I'm not going too far out of the money and stuff like that. But the majority of these names, I just, it's a cheaper way to play Tesla. And because I like the spot risk reward wise, I don't mind, I don't mind pulling the trigger here. Right? If Tesla was already running, it's probably the last thing I look at. I wouldn't look at it. Into a run like this, I'm looking to scalp. But the options, and especially a lot of the names I play, the options are really, really tough. To buy decent size, is the liquidity there? The spreads on these things. But you see, I'm not that aggressive type of player, right? Like even you see in the room, compared to a Ranchero, a Lucci, or anybody in the room, they're literally playing zero DTE, right? It's the opposite, total other side of the fence of what I'm doing. I like slow and control. You understand? Does that make sense? When I need to be quick, I don't trust myself. I like slow and control. The more, and you guys know this just by looking at names that I end up buying, right? I like things that are dead and doing nothing. Those are my favorite type of plays, right? Because then when they catch sweeper activity, that's my sign that, okay, There's the possibility of momentum coming in this name. But since it's dead, now I can get my hands on it, right? I can think, I can plan. When things are going a mile a minute, you know, like the APPs of the world, or, you know, even NVIDIA, or even a Tesla when it's hot, I don't fool around with this stuff, you know? I don't fool around. Yeah, so no, I mean, plain and simple, right? Tesla is 2 times, I mean, TSLL is 2 times Tesla, right? So again, a sweeper, Tesla catches call buying and put buying all day long, right? One day last week, as you guys remember, I think it was a Thursday because we were talking about it on a Thursday. There was buying that came in that looked different to me than all the other speculative shit in weeklies that we see every day that people play in. You understand? It looked like an institutional footprint to me. All right, we talked about it. So based on that order flow, okay, I wanted to see if I can make a play on Tesla the way I like to make a play on Tesla. Now, so that was either going to buy December calls, okay, or buy this TSLL at a decent spot where I can manage my risk, right, and play it accordingly. So it's got nothing. I don't need to see flow in TSLL for me to buy TSLL. It's 2 times Tesla, you know? It was the flow in TS and Tesla that got me to buy TSLL. But like, for example, even a name like NVIDIA, right? When I day trade, let's say NVIDIA, let's say sweepers come in, NVIDIA, okay? I'm not buying NVIDIA. I'm not buying the equity NVIDIA, okay? I'm not buying weeklies in NVIDIA, right? I go and I'll buy some shit like this, right? Or even like AMD, I think is a better example. Ooh. Right? AMD catches, and we saw it, right? A couple of weeks ago, for the last few weeks, months, AMD gets attacked by sweepers. As long as, you know, if I think I could get in the middle of it for a scalp, I mean, now it's 13, but this thing was $7, $8, $9, $10. I can, depending if I want to take half decent size, I could take decent size. It's liquid. And it's almost, it's basically, to me, you know, just a lot more control I have over it, I feel. Where, you know, options, my brain doesn't work that fast, guys. You know, I'm not afraid to admit it. And there's more, there's more risk also. You get more reward in options, and there's more risk. At the point I'm at in my life, I'm good. You know? I'm good right now. I don't need to get crazy. Okay, listen, everybody has to each their own. You know what I mean? To each their own. Everybody has different styles, some more aggressive, some less aggressive. As long as you feel comfortable, that's the most important. But, you know, I'm just explaining to you, me, I've always been an equities guy. Always. You know? And you guys know, like, my game is not buying Tesla. My game is not buying NVIDIA. It's rare that I play those names, only in particular spots of selective action. You know, my game is the underbelly, right? When it comes to stock, individual names, all individual names. So, you know, that's my bad. You know, if I played the larger names, you have to play options, in my opinion. All right. Here's an example like Andrew. Okay. Avgo. All right. I mean, some of these things have split too now. So, like, you know what I mean? But even the pre-splits, they were like $1,000 stocks, all these names. I'm not buying the equity. You have to play the calls. Like, I think if you took out the options from these things, I don't think they would have went up as much as they did coming out of the 22 bear market. Everybody was buying calls in these things. They're expensive. The majority of people who are buying the equity are mostly, funds, and they're holding on to it. So if I played these names, I would have to be, what I'm getting at is I would have to be an options player, I feel. You can't be, you can, but it's just, you know what I'm getting at, right? Like, I don't think you could be an equity guy in these and play these names solely. It's tough. Like the underbelly, anything from $1 to 40, 50, that's fine. Once you start getting into the 300, 400, 500s, I mean, that's kind of something I'm not too interested in, equity wise. All right. What else? Again, the names, guys, if you remember, just the market's been doing a brilliant job of it. Every time there are things that get hot and cooked, somehow, some way, the market takes a hoses it down, moves somewhere else, and then can come back and play and revisit. Right? We see with just a lot of names. More so individually, but what we were talking about on the STEAMROOM webinar on Sunday, that a lot of the names that were overheated have now cooled off, and they're at decent spots for trades. I think, like, I just pulled this up accidentally, but this is like one of them, right? So you had, this thing was red hot. I made some nice money with this cipher. A lot of you guys did, right? This was a popular stock, okay? It got a little crazy here, topped out. Look what they did to them, though. Look at all the chasers, and you can look on Twitter. Everybody was chasing here, okay? They got hosed. And then you find a nice downside niner bottom here. Not a bad risk reward for a trade. So that was the point, like we were trying to make, is that if you like this name, at the least you want to see something like this, okay? And then if you like it, here's where you want to revisit. Okay, it's not a guarantee that it's going to work, but if you like it already, what's the difference? You're better off than chasing here, right? So I just think a lot of this stuff that got overheated, not all of it, you got some exceptions. I think like Oclo might be still pushing higher. That thing's a month piece. No, well, you see how it's getting choppy here, right? So they've done a good job of slowing it down when they need to slow it down. Keep things in check. What do I think some of the best names that can benefit from rate cuts? Oh, we've been talking about a few of them. There's some people in the STEAMROOM who own them already for a while. They've been making decent money with. RKT is one. Plain and simple, as rate cuts get priced in, RKT catches sweeps and gets a bid, But yeah, this, I think like dips are going to they're going to get bought. The problem is if you chase strength, you may run into some economic data that's strong and rate cuts get priced out. Kind of what we've been seeing. But I think we see more of the opposite of that. This is another one people have been talking about in the room. TREE. But there are a lot of them. There were a lot of them. The home builders, you want a stud? Here's a stud like Home Depot. You got a lot of names that should do a lot better than they've been doing, right? It doesn't have to. It can get to an extreme. Like if we have to cut rates for whatever reason and people need to rush into these things because they don't have any exposure, it can get hot quick. But I think what will happen is if it did, I think it would weigh on tech. I would think you see money come out of tech. You know, I think that would be the risk of that. I think you see a more gradual kind of what we've been seeing overall. UWMC struck. That's another one a few of you played, right? That benefits from it. You know, like a lot of us have been looking at the more speculative names because they're cheaper and you kind of get a big pop, right? They've been lagging. But there are a lot of quality names, Giancarlo, if you're interested. I mean, anything in particular you're looking at? Like all the names you mentioned, this is tough, right? This is the regional banks. Okay, so this is not an easy trade, but I think it's worth owning. If you like it, I think it fits that bill, you know? They're just tough. Not easy money. They're tough. The banks, which we talked about, I think the banks, any pullback in the banks you look to buy for the time being. You know, Goldman's been a beast. Look at Goldman. Right? All of them. Schwab. Right? I know a lot of you like Schwab. That's just been grinding higher. This, you know, you get a little bit of both. This hood, I mean, has been unbelievable. So you know, there are a lot of names out there. You know what a buddy of mine loves right now? We don't see flow in it much. This one. And the reason he likes it, he thinks the wave of options we've seen, right? How options have become so popular. He thinks with kind of what they're doing now in futures are going to become just as popular with retail. And this stands to benefit. Right? So kind of what happened with this too. Look at that. Right? From post-COVID, kind of the option market, the action in the option market been bananas. Look at this TBOE. So the CME has done well as well, but he thinks like you're going to see a big benefit from it, which makes sense. But yeah, there's so many areas of the market, guys. You got to understand, like, don't get me wrong, there are parts of this market that's expensive, right? Multiple wise, there are parts of this market that are expensive, but those parts of this market, the growth in those expensive areas are insane. So until that growth runs into a hiccup and slows, you can justify these multiples. The market always does, right? We saw it with SaaS and software. All of them were expensive for a whole full year or two before they blew up, right? So as long as they continue to grow, at the rate they're growing, players will ignore that multiple, you know? But the upside becomes a little more difficult, gets choppier. But my point I'm getting at is you got a whole other market out there. Like, here's the thing right now. Even if tech blew up, okay, even if AI blows up, I think the market would correct, maybe violent, okay? You get a correction? I think that sets off a bull market in 75% of everything else. Call me crazy. A la 2000. In 2000, the internet bubble blew. Everything came down because of it. But by 2001, going into 2001, there was a bull market under the hood that nobody knew about that was ripping. Housing, small caps, mid caps. So while you had all those tech internet names get buried, all that money, that institutional money, because retail held the bag all the way down, that institutional money came out of there and went into everywhere else. So the point I'm making is that even if, like, bears are going to come at me and say, oh, yeah, but the tech bubble can blow, even if it blew, yeah, I think the markets would correct, but I think it would set off bull markets everywhere else. You know, look at like housing. I mean, housing has been like in a depression, right? In a depression. The home builders, which led coming out of the 2022 bear market, they led, right? Look at this move. They've been dead money up until now. Look at them now. Yeah. So again, it's not new. This is what we've kind of been pounding the table on for so long, is that as bullish as it seems out there, you have so much of this market that's underowned. So much. You know, in every other bubble that popped that I've been a part of, and like even to, let's say 2000 to 2008, you had everybody all in almost everything. In almost everything. Like 2007, you had banks, all new highs, crowded, home builders, new highs, crowded, industrials were the hottest sector on the earth, crowded. You know, you just had a different backdrop in so many areas. Like, I think again, this market, we're gonna need to catch breaks. We're gonna need things to fall the right way. Okay, and it may not be clean. It may be fits and starts type of thing. But I still think the big risk out there right now is the risk of a right tail, legit bull market on the way. I really do. Because again, coming out of 2022, that felt like a bull market. That was not a bull market in equities to me. You know, that was a defensive rally driven by mega cap names. The buying wasn't from bulls, in a sense. They were cautious in driving that rally. To where, you know, now, again, you got, right, as much, whether you love him or hate him, Trump, a few of these things that everybody was all bullish out coming into the year, they start to play a part. This tariff thing starts to subside. The Fed gets back on your side. It's, you know, and it's weird because we never had a setup like this where the Fed can join the picture here, right? Usually the Fed is in from here. You understand? That's usually how it goes. The Fed comes in here and helps drive things higher. So then you're worrying about the Fed unwinding, right? Now the risk is you get the Fed to become favorable up here. But the biggest beneficiary, if that happens, is not going to be AI and big tech, in my opinion. You understand? If that plays out, the beneficiaries of that are the stuff we've been talking about here, not AI tech. Because, again, AI tech, everybody's in. You understand? Everyone's been buying AI tech. It's owned. It's bull market owned. It's the other stuff that nobody owns. So what else? Anybody else have any quick questions or any names before we wrap it up here? Any names that piqued their interest that may possibly they're looking for action, especially going into next week? Or post earning stuff. Anybody have anything interesting? I always draw blanks. There are always names that I want to talk to you guys about, and I always draw blanks when I come on this webinar. We didn't even talk about this. I think we talked about this, right? Oh, yeah, we talked about this last Thursday. But I bought some of this CMPO. I don't know if I told you that, though. I forgot to mention. Oh, I think we talked about it Thursday, now that I'm thinking. Anyway, CNC. These names are tough. These names are tough, okay? This is healthcare, obviously, okay? And this is like the UNH thing. I think it's just time. You know? I think if you're interested in these things, you need time. You may not need as much time. You hope you don't, but I think you have to go into it with that outlook. This is a sector-wide blow-up. Now, don't get me wrong, the positioning setup, because of the blow-up, is on your side, right? Where the worst could be over, okay? But that doesn't mean these things come ripping back. You understand? It may sit around here. These things could sit around here a while. It's almost like the fundamentals of the industry have changed. You know? So, again, with the current market the way it is now, right? With everything we just talked about, for me, I don't have the motivation to tie up funds in this stuff yet. Does that make sense? You understand? Like, I'd rather have tied up funds in names like this on a longer term time horizon than kind of buying a blow up sector. You know? So again, that's my opinion. You know, that's just my opinion. And flow wise, like, UNH has been one of the better names flow wise. That's why I think, several people in the room own leaps and shit like that. There's been some decent buying with time in UNH flow wise. But beyond that, there hasn't been any flow that's kind of gave me a kick in the rear end to get interested. My favorite name, like I think anytime it gets thrown out with the bathwater, you guys, we talked about it, ABBV, but I don't even think this goes into that category, Like, look, this thing's almost back at new highs. Remember we were talking about this pullback here? Like this is a stud. But names like CNC, this is a tough cookie. Tough, This is hard money. This is tough money. BHC, somebody brought him up today. Oh, Frank was talking about it in the room. That there's some insider buying here. I haven't seen any flow yet. This name, we saw some flow. This name, probably one of the better sweeps this week, just as far as orders are concerned, was the sweep in this resi. But there's August exposure there. So it's probably replacing that, So that's kind of the problem with the flow this week. It was a good looking order. All right. Like here, I'll pull it up quick. Here it is. So like if this came next week, I would have brought this name up already. Like that's how good looking of an order it was. You understand? But there's August a lot. Like here, let me show you just so you understand. I mean, I've gone over it with you guys in the past, but let me just show you so you know what I'm talking about. If I could pull it up. Yeah, well. Oh, wait a second. There we go. All right. So here is the open interest in this resi. Okay. So you guys know what I'm doing during OPEX week, and it frustrates the living daylights out of me, right? This order came in, and I'm like, oh my God, this is a bullet. You know, this name doesn't catch flow. So I'm like, wow, this is a good looking order here. 600 grand, clean as a whistle, you know, no earnings. So automatically, because it's OPEX week, I say to myself, I probably said it out loud. I go, guaranteed, there's an August position in open interest. Now, this name trades nothing. You never see options activity in this. But automatically, I see an order like that this week, and I say to myself, guaranteed there's an August position in open interest because the how good looking this order was. And you pull up open interest, and look what you got here. Call it 2,300 August 30s. The second largest position, right? You have some November exposure. That's the top open interest. So what's likely going on here is this guy buying 1477 of the November 30s, okay, is adding to those November 30s he has an open interest, replacing this August position. So it's not, what I'm getting at is it's not new money, new funds. It's like a roll. Right? Now, you can say, all right, the player is bullish and he wants to keep that exposure. You can make that argument, but you can't treat it the same way as if there was no August exposure and a missile like that comes in of new money. Because that would be conviction behind that bet. This is a position being replaced. And that example literally applies to almost all the flow we've been seeing out there this week. All of it. Even the shit name that I played, this AST, okay, has August exposure and is probably replacing it. So that's the frustrating part about OPEX. URI, yeah, well, URI, we saw action in URI. Hold on a second. There was a good-looking sweep, I think, in URI. Hold on. This is it, right? May 5th? No, that long ago? Hold on. Yeah, wow. That long ago? May. Feels like last month. So there you go. That was the last good-looking sweeper activity in URI. May 5th? Wow, did this guy pick up the money, huh? So look where that came in. September, back in May. 710s. The stock is 921 right now. Woo! Wow. But you see what this order looks like? Look at this. 144 contracts. Most people aren't even paying attention to that. Right? No one's you're not gonna see that being posted on X and Twitter, guaranteed. 600 bananas. You know, and URI doesn't catch a lot of action. So that was the last bet, Luis, all the way down there. All the way down there. I knew I remembered a notable bet in URI because it doesn't catch action, but I didn't realize it was that long ago. Yeah, Sahil, I'm still here. I'm still here. Sono, that's another name, insider buying, Sono. Again, there was some flow this week, probably replacing August exposure, but you got insider buying there too. I remember you talking about that, and I got the that. Oof. You think you still be holding it, Madden? Maybe rolled, right? If anything, if that. But look at this now. I mean, you got a breakout there in URI. Wow. Yep. This low here, yeah. But look at, I mean, look how good that is. You know, this is another stud. Any pull, like if you can, any pullback and you see flow, you know, you like this type of, you like this name. I mean, they're as close to a lock. Sometimes they just take time, you know. But this is almost like ABBV, right? Any little correction, they buy it right up. Yeah. ITW, that's Illinois Tool Work, right, Madden? Yep. That's looking to bust out as well. That's a good question. Oh, there was an August week there? I don't even remember that. But yeah, that's a good industrial too, Illinois Tool Work. Louise is asking, how do you interpret insider buying? Yeah, it's tough. You like to see it, but for me, like I would need to see flow confirm it because of the timing. You know, but yeah, listen, there are winners and losers. Like AMD saw some insider buying when it was out of favor. That kind of like helped it turn the corner. You know, but I also know, like, you see this name? There's been insider buying in this name. God, how long? I don't know how long. And look at it. It's been a dead hockey stick forever. You know? But listen, I like to see insider buying. You know, I like to see insider buying even more so than, like, sometimes when there's a blow up, insider buying, you know, you need time, it gets tricky. I like it even more so just on a pullback, you know. I'll give you an example. Schwab had aggressive insider buying the CEO when FIVB crisis. That was here. All right. So the CEO, you guys probably remember, it was pretty noteworthy. Like, made the headline. CNBC, Bloomberg, they were all talking about it. Stuck his neck out and was buying the living piss out of this thing. You know, and then there was some bull flow that followed, so kind of confirmed it. So, you know, you like to see insider buying, but again, you know, it doesn't mean the trip is going to be smooth. Like, look what you gotta deal with anyway. You know, so for longer term stuff, you like to see it. Don't get me wrong, you like to see insider buying. You know, if it's noteworthy. You know, if it's not noteworthy. But I like to see it. I like to see the flow confirm it no matter what. Yeah, patience, exactly. And it, you know, easier said than done, you know. again, the patience thing is tricky too, because if you're buying at the wrong times and being patient, it doesn't matter. You could still lose a lot of money. Like, it all comes down to, and that's where a lot of like the positioning stuff that I follow has helped me out in a big way. Where I should get most aggressive and where I should tone it in. All right, because you can have all the patience you want, and if you're buying into the highs while positioning is, you got a full boat, I mean, you can run into some trouble. Now, you can make the argument you need even more patience, and sometimes they'll pay off. But look at some of the hockey sticks, right? You're talking about years and years, some of these things don't come back. And God forbid you're buying like post 2000, it takes a long time. It takes a long time. But patience helps. I think patience in the way we kind of been talking about it recently, I think it is most important. When you, like, kind of what we've had in this rally, is you understand the backdrop, you're on offense, and don't micromanage things, right? Slow things down a little bit. And Jemima, that's been active. Seeing spec action, that's had quite the move. ONDS, I traded. I think they had a secondary. Was that yesterday? Or maybe not. I don't know. It doesn't look like it had a secondary. But this has been catching a ton of action. From $1. You guys remember? From $1. There's a lot of stuff like this now where I'm not my most comfortable. I'll give you an example. Like Madonna in the room, a member in the room, I think is long this name. It looked great. But here was the initial activity. Here was kind of your secondary entry, and now the stock has gone from 4 to 11, and it's still seeing flow. So now what do you do here? You buy it at 11? Some people can do that. I can't. It's not easy for me to do. You understand? Like, for me to buy this at 11, there has to be aggressive buying that comes in, and it's a trade. It's a trade. You understand? I'm going to be quick. So basically, what I'm looking at is aggressive buying coming in, and I'm playing just off the momentum of that buying. I'm not looking for those bets to be right, if that makes any sense. Here, I'm buying, and I'm relying on those bets being right. Like, I think that buyer has conviction and feels good or knows something, and that's why he's buying it, right? So I'm relying on that. Up here, if it's catching action, I'm just looking for that buying to create momentum. That's it. What's an example? Here's a recent example. Okay. Archer was one of my nice winners of last year, right? Joby, Archer, and was catching action in this rip here, right? All the way here. So this is what Archer looked like when multi-million-dollar sweeps. And there was very little action in the name prior to that. Okay. And you can see the volume swelling here. Okay. So 4 and change, multi-million-dollar sweeps, real buying, crazy buying, and it's just coming alive, right? So now, look, this is how I'm looking at it. Archer did this, it did this, it did this. There was no aggressive buying like that throughout this. But here, all of a sudden, there's this aggressive band of buying coming in, likely an institution. a fund. Right? So what that tells me is that this move is likely going to be different than these. Right? They're going for the breakout here. So I'm willing to give it, even though I'm always selling early anyway, but it sounds better anyhow. So let me finish my sentence. I'm willing to give it a longer leash. You understand? But like I played Archer here. Okay, was catching some accumulation. More short-term strikes, but there was a band of sweeps. I bought it and I sold it. You understand? Like I sold the first pop. I remember it went higher after I sold. So that's how kind of, I'm nowhere near as comfortable up here than I was here. And how can I be? How can I treat the flow the same way from when they started to aggressively buy it at 4 to now where, all these bulls here are they're likely rolling, right? They're likely rolling. They're not coming in and maybe they're adding a little bit, but they're not amping up and putting even more money up at $12. Very unlikely. So here, I'm just looking for it to create momentum and trading it. Here is kind of where I like to build a position or swing it in a sense, where I'm looking to be quicker there. So that's like, what name did you bring up? This name. Like I traded it last week. I think it was last week. And it went higher than where I sold it. But I'm just giving you the example, right? Like the buying in OMDS, many of you know, I think you guys played it. Right? Weren't you guys playing it? Started here, right? I remember it was under $1. How about that? I remember it was under $1 OMDS. I was like, look at this piece of shit under $1 they're buying. Yeah. So now at $4, right? After quadrupling, I can't get myself to buy it the same way here. I can't. But this whole group has been hot, right? This is drones. Me and Sahil and I played, what was that name? NB Sahil? Yeah. We made a nice quick hit with this. NB. This was one of the newer ones. They were buying here, right? Somewhere around there, maybe a little higher. I don't remember, but had a quick rip. But even this too, like the flow wasn't anything that good. We played it because there was sweeper activity, and we found out they were going on Maria Bartiromo a day later. So we were just playing the momentum. But this is something, if it caught Archer type buying or ASPI type buying down here, this is something that I would like to own and give it a little leash, a longer leash, I should say. But yeah, like there's so many like this. What's another one like this? So many. Oh, this one, right? We keep seeing flowing. APLD. Like this stock just went from 5 to 15. Right? And I know like a lot of you still like this name. Now, don't get me wrong. If you're in it from 5, 6, 7, I'm not saying to sell it. I'm saying to buy it up here is really difficult for me. That's the point I'm making. I'm not saying to sell it. If you're in from $5, $6, you should hold it. OUST, that was another one. That was a nice hit. And that's still going. You had a nice shakeout here, though. And then you had earnings. That's what kind of gave it a kick in the ass here. But yeah, here, OUST down here, right? See? Front running that breakout. That's what I like, you know? And they don't always turn into this, but that's what I like. I mean, listen, if you trade these names like a lot of us here talking about these things are, I mean, it's been a great time, okay? So we got to be realistic too. Like a lot of us think, oh yeah, we know what we're doing and we figured it out. All we're gonna do is print money now, right? It's our time. You understand? Just like it was whoever plays the mega cap names buying calls, it was their time, right? A year ago, whenever they were going bananas. It's been our time. So just a reality check for all of us. All of us. You know, it could, I'm not saying it can't last, but the market isn't always like this, as you guys know. USAR, that's another one. MTEC, that's another one. So many, guys. So many. You know, so many. So many. By the way, this one, Goldman just touted. They put a buy on it, $13 target. You got Goldman pumping this now, UEC. I don't know if you guys read the note on from Goldman on it. They're all bulled up. All bulled up. Right? You. So many. What are you gonna do? You can't buy and hold them all. You run out of money. But it's been good times. LEU, that's a nuke, right? Oh, you know what nuke I like? Sahil, I think I told you this guy. MIR. But like this one too, ASPI. They're kind of sleeper nukes. But again, there's so many. ENB. Did I see big calls? Papu, I don't remember seeing. They quite possibly, but they probably were rolls. Let me see. ENB. Because to be honest, I haven't really paid as much attention as I usually do. ENB. What is that? August. What was it? Looks like a spread, the big volume. Jan 35s blocks. So you have it was not sweeper activity, not the type of call buying that I'm looking for, Papu. It was blocks. Block orders. Primarily in the steam room, we're following just sweeper activity. We're not looking at blocks at all. Yes, pipeline play. And as you can see, it's been a hot name. Has been a hot name. How is that other not gas name? Next, little pullback here. There's been some nice buying in this thing. NEXT. Looks like you got a downside niner there too now. But so many names, guys, you know? Been so many names for the last, 2 months? Pretty crazy. You know, I was looking at this name, T. I was looking at it. GJT kind of scared me away from it. I forgot the term. What do you say, Madden? Ponzi, reverse Ponzi scheme, he called it. And he kind of rained on my parade that I was curious about it. What I like about it is the leap activity it caught. You know, it caught some real leap buying. So that piqued my interest. And this is kind of in that rate cut arena too, QXO. You know, is in that rate cut arena. If I'm not mistaken, you know, they were bidding trying to outbid Home Depot on an acquisition. This little thing. So they're not that little as far as I can see. But again, I don't know anything more. All I know is that leap sweep. There were a couple of them twice. See, GJT, he was calling it I think he called it a reverse Ponzi scheme. Wait, is it up here? But yeah, if you like it, like if you know about the company, if you like it, I mean, I would buy it. You know, here, this is look, meet QXO, the upstart building material stock that may battle Home Depot for GMS. Brad Jacobs. Oh, so you know about the company, T? Yeah, the leap. There was a couple leap sweeps. I think it was deep in the money leap sweeps that were interesting. I guess I asked him to clarify. What he was saying is they make acquisitions, like they're just totally making acquisitions to kind of cover up mess. That was what he was saying, GJT. But again, that's his opinion. You know what I mean? You know, if you know the name, you like the name, like you're meant. I don't even know Brad Jacobs. You're saying, you know. Beacon, yes. Beacon Roofing, right? They bought Beacon. Yep. So anyway, again, all I can tell you is about the flow, okay, right? And there were a couple of interesting leap sweeps deep in the money that caught my eye. TEM, I'm a long-term holder. I've been in the name from here, right, where that arrow is pointing. Since then, I haven't sold. I didn't sell this Pelosi rip. I've been still holding. I'm waiting for this big breakout, big bust out. I think it has its time. I think this is the 3-digit number. You know what I mean? That's kind of what I'm looking for. It's more of hunch now than anything else. You know what I mean? I'm not basing it on like the flow we saw in the name. That's a long time ago. Pelosi's in it. You know, that's great. I just, again, AI, healthcare, and this is kind of the name right up there. You know what I mean? It's a go-to name in that group. So yeah, it's a little easier for me to say, right? Like I love when people do that. They push a stock and how bullish they are, and they own it like $30 cheaper. You know what I mean? Like they're telling you to buy it, but meanwhile they own it dirt cheap. So yeah, I just want to make it clear. I own it over there, and I'm still holding, and I think we get $100 number minimum. Like that's kind of what I'm looking for out of it. But you see what I'm looking. I've been willing to ride through. I don't have a size position. You know what I mean? I don't have a size position, so I'm willing to sit through all these up and downs. Even though this was a pretty nice profit that I let slip away. LSCC, we don't see much flow in this name. This is a semi, and it's cyclical, so it should do better, right? These are the semis that should get involved. Like I think you traded one, TER. This is another one. On semi, ON, NXPI, Texas Instruments. Like this is the part of the semi complex that hasn't participated because they're tied not just AI, all the other shit. The auto market's been weighing on them. So if you get rate cuts, these things should benefit. You might even see these things outperform. AMAT, yeah, is down on earnings, right? Oh man, 162. Wow, that's a nice hickey. Probably finds buyers. Madden, I know people who are in this thing that are so frustrated that this is not faring better than it is. Because this is a big AI player, Marvell. Big AI player. Like, I know Bova has been pounding the table on this thing. Pounding the table. Like, they think this pullback was a gift from the gods. Because of how big of an AI player they are, right? It's not just a cyclical play like the others. But, it's been really frustrating. A really frustrating name. But, yeah, I mean, Madden, you talk about like maybe rotation outperformance. It's right in there, right? It's right in there. Because you think of it like, you got an elevated multiple. There are several parts, names that are crowded, and people are looking for opportunities in other things. And, Marvell, you're getting a piece of the AI as well. And the stock is what? 40% off highs? Jacobs found it. Oh, I remember that. Somebody told me about that. Yes, T. The URI guy. That's right. Interesting. Yeah, so T, again, from the flow, a longer term bull, institutional type buying that believes in the name longer term. That's basically what we saw some signs from out of the flow. Exactly. Probably a bet on him. Thanks for that. Good. Thanks for bringing that up. That's exactly what it is. Exactly what it is. Leaps 2027. Yeah, Blastar. 2027. Yeah, this is, we've been talking about this name a lot in the room. This is already a good one. It took me a while to figure out what the hell they are. Who is this company? Are you? Yeah, I would hold on to this, no doubt. No doubt. Definitely hold on to this. Definitely. Yep, you had nice consolidation. The flow's been pretty bullish, as you know. I see this name mentioned all over the place. All over the place. With some of the big names. CoreWeave, all that, So looks good. This and this one too. Like, this BET. Oh my God. Look at this BET. This is another one, And then once Goldman started coverage on these things, on this one here, it just got nuts. Yeah, a lot of us in this BE got out of this way too soon. Way too soon. Oh, I'll be honest with you. I sold it really quick. And because I had a bad taste in my mouth from the COVID days, because this was, if you remember, one of the COVID type names. Yeah, struck. But supposedly that Yondang's business they sold off and got rid of. I don't know. There's a whole big thing with that NBIS. It took me a while to even understand what the hell this thing was about. But now it's like a power AI name, right? NBIS. So a lot of times that happens to me. Somebody else, like names, you buy names off interesting flow, they move, you make some nice money, you get out, and then you start to realize what the flow is all about. Like, oh shit, There's some realness behind this company, you know? And obviously the stock is higher than where you bought and sold it. And you find that out after the fact. It's pretty frustrating. You guys know the story, SE. You know? I thought it was a shipper when I bought it. A shipper. I thought it was like Scorpion, like STNG, a shipper. And then after I sold it, all the flows coming in. I'm like, what the hell is this? What are they buying here? And I find out like it's kind of the Shopify of Asia. Yeah, I mean, I could definitely see that ballooning, that NBIS. You know? Well, put it this way. If you think like AI is still early, right? Again, that's above my pay grade, so I have no idea. But if you think this whole AI shit's early, you know what I mean? There'll be corrections, but those are names you want to hang on to. Those are names you want to hang on to. But the tough part is holding through the corrections. If you have any size, it's almost impossible because everybody wants the rip. Okay, but what's more likely to happen is this, T. Like, think about now, okay, I got a size position in TEM. How am I holding through all this? Let's be honest. You could say all you want that you're holding through all this. How? You buy it, it melts down on you here, right? You're hanging in there. You don't want to take the loss. Then Pelosi news, it goes bananas. Now you got to avoid selling into that. Then it pulls and erases the whole Pelosi move. And then how many fits and starts along the way here? How would you hold through a size position, right? In thinking like this is, minimum $100 number, above 100. It's not easy, man. Yeah, what's funny? Like I'll give you a perfect example. Okay, one of my best buys of my career is Meta. Okay, I own Meta. The only reason I still have Meta, okay, I bought it, I think it was 2013, if I'm not mistaken. It's in my daughter's account. You understand? There is no way in hell that I would still own Meta if it's not in my daughter's account. No way, no how. I don't care what I say. No way would I have held it. And you know what's the crazy? I held through the Facebook demise where people thought Facebook was dead. You guys remember this. Okay? So I bought all the way back here when it was Facebook, right? Held all this and then held through all this. And I'm still in it. And now, right? It's not even like AI, but it's an AI play. But is to your point, you got to put it in a different account, and you almost can't even look at it, right? Like you can't even go look at that account. You get your filthy hands on it, you cause at least me. Yeah, well, this is the generation of spoiled. Everybody's a spoiled little. You know what I mean? They don't appreciate anything. All right? All they want is their tech. This generation. But she'll appreciate it. Probably when I'm dead and buried. Yeah. Well, that's I think ultimately that's the goal of this game, right? You want, especially if you're young, right? What I would do to be young. Like if you're in your 20s or even early 30s, like what you want to do is there's and I think it's got to be a separate account. There's investing, right? What we're talking about, what we do, it's not investing. It's a whole different animal, right? Investing is you're buying, investing, and holding over time. Time is on your side, right? So that's where you want to take advantage of corrections. You want to take advantage of bear markets. You want to take shots in names you like and leave alone. Over time, there's nothing better than equities, in my opinion, over time. People say real estate. I don't think it even compares. Now, the returns compare, right? But you go into a tough real estate market, good luck trying to sell that real estate. Good luck. Not to mention all the shit you got to do along the way with tenants and this and that, right? Equities, you park in an account and you press a button and you can liquidate it, right? I used to say all you had to do was call your broker. You don't even have to do that anymore. You press a button and you're going into cash. No, I don't care. No one's going to win that argument with me. No one's going to convince me that anything is better than equities. So again, in my rocking chair, any advice that I can give to anybody who's young out there, that should be goal number one. Goal number one, above trading and anything else, is dollar cost averaging into the market over time. And then, 15, 20 years from now, and it goes by, let me tell you from experience. Yes, you hear that? That's how quick it goes by. You're going to be thankful you did it. Okay? And, don't get me wrong, you got names you want to sell, you move it around, that's different. You can, but you have to, whether they're ETFs, whatever it is, right? Index ETFs, sector ETFs, or just SPY, whatever it is. You want a dollar cost average, and you want to leave it there. You want to leave it there. You don't get shaken out of it. No matter what, you don't get shaken out of it. Okay? I mean, that's the starting point. That should be your goal, right? Every little money you come across working, whatever, you hit a parlay, whatever it may be, you're looking to do that. And then, like T said, what we're talking about doing is trading around that, right? So while that grows, you're learning and becoming better at position trading, right? Hopefully to the point where you can find success and generate some money through that. You want both, but you gotta be able to separate them. Bitbart's got to be a key holding stock. That and a little fart coin. When you have a leverage ETF, what's the max % of your portfolio? It all depends. I don't really have any set rules, to be dead honest. I wish I could lie and say I do. It all depends. It all depends. Because depends. If it's something that I'm going into and I'm gonna, pull the plug on, I'm willing to take a little more size because I'm gonna pull the plug. If it's something I'm gonna stay loose on and possibly want to add to, obviously I'm taking less size there. So it all depends, Depends on your account size. It depends on your income, your risk. It depends on so many different things. I know it's an easy way out, Caesar, but these are things I think you have to ask yourself, right? And be honest with yourself about constantly. You can't ask for other people's advice, because what I may do for me, I may be comfortable doing for myself, but you may not be comfortable. And being comfortable is the most important thing, right? Because if you're getting shaken out of stuff too quick and they're going higher and you're getting frustrated, one, you're going to get really frustrated. Two, you're playing too big. You're playing too big. Right? If you find yourself that you're antsy, any little weakness or any little volatility, and you're getting stopped out too quick, and that means you're too much size, too much stress. You don't, even mentally, you don't want to do that to yourself. But what could be stressful to me may not be stressful to you. I look at how people just play the game, and that would make my brain blow up. Right? Case in point, what Lucci does on a day-to-day basis, my head would spin and roll off my shoulders. So that's what I mean. Nobody in this game can tell you what to do, what you need to do. Nobody. That's the one thing about this game. There's a lot of great things about this game, but the one thing, you got to be honest with yourself early on, and these are the questions and the stuff you got to figure out on your own. The other stuff you can learn from experience and watching others, but that stuff, right? And again, if you playing with all the money you have to your name in an account, right, it's going to be a lot different than somebody who is older in age and still has an income coming in, and right. But the stress is a big part of it. I'm telling you right now, big part of it. That's what knocks people out of this game. Right? They lever up. They want to make the big score, but they don't have the capacity to take that risk, and they burn themselves out. But the beauty of it is this market's not going anywhere. Especially if you're young, it's not going anywhere. There'll be corrections. There'll be your occasional bear market. There'll be melt ups. There'll be bull markets. There's cycles come and go. But I think the basic principle, and from what I learned, is that just understanding where you want to be most aggressive with that risk, and when you want to start being a little more cautious and cognizant about putting on risk. That's one of the more important things for me that I discovered, because in a bull market, like I just said, everybody thinks they're Mr. Stock Picker now, right? Especially in names. Everybody's got their hot stock. Everybody knows everything, right? Everybody's got this new thing, this new system, this new strategy. They found it, they made it, everybody. In bull markets, as long as you're not being a stubborn ass and shorting a bull market, you're going to make money. Some make more than others. They get lucky, a little more luck, blah, blah, blah. Okay? It's the ability to keep that money when that bull market's over. For me, that was the light bulb that went off. Now, I tell you guys all the time, I had no trouble making money in a bull run. That was the easy part. That was the easy part. But every time the market corrected, every time I not only would give back all the profits I made and then some. So I had to solve that problem. That was the most important thing to me. Nothing else. Not picking the right stocks, not any of that shit. Right? It's to keep me bullish when I need to be bullish, make me aggressive when I need to be aggressive, but at the same time, when it was time to be cautious, make sure there was something that kept me cautious. I call it the seatbelt. Yeah, so right? There's so many, right? There's so many people out there now that think, come on, let's be honest, right? Everybody in here, we're all the same shit, right? In bull markets, especially like this, we all find winners, right? You get a little lucky. Sometimes one goes parabolic. You think you saw something that the reason it was going to go parabolic, but that's not the right. No earnings and revenue, exactly. But that's not the trick to this game. The trick of this game is to keep that money you make. That's the trick. Am I wrong? Honestly, that's the trick. Yeah, and you don't want to get too nuts, right? You don't want to overthink it, but that's the most important part. You need these reality checks, right? But listen, early on in this game, I used to battle all these things. No one's better than you, just through experience. Some people, they're stubborn, right? They don't learn from that, and they keep making the same mistakes. The beauty of this game is it shows you your mistakes. It shows you what you need to fix pretty early on. If you focus on fixing that, you'll be around. You'll be around long enough to make money. But if you're stubborn and you want, again, that quick score, that's the draw. That's what buries retail. Right? They don't realize anybody can make a quick score. Anybody. All you got to do is size up and roll the dice. Anybody can make a big score. Doesn't mean anything. Let's be honest, no? I can go out on a limb right now. Give me any stock, right? Bit farts struck, and I can load up on bit farts, and if I get lucky, I can make a score. What does that mean? That means nothing. Right? Because then what happens the next go around? And the one after that, and the one after that, and the one after that. And the one in the bear market, and the one in chop, and the one in it, right? So, but then if you learn all these things along the way, and sometimes it's different for others, but that for me, that was the big, like people think like light bulb is, for a lot of traders, it's different. Like, maybe stop losses or shit like that. For me, that was number one. I had to figure out a way to hold on to the money. I knew no matter what I did, if I became the best trader in the world, didn't matter. Because if every correction I gave all my money back, I spin my wheels every time. Yes. So anyway, it's been fun times, and it's always fun when you're making money and stocks. There's stocks to talk about and moves to brag about. So we definitely want to enjoy them, right? Because when corrections and bear markets come around, we get bored and we want to pull our hair out of it. Bazooka Joe, it's funny, Struck, and then I gotta run anyhow. But Bazooka Joe, I was thinking about Bazooka Joe recently. The reason why Bazooka Joe was so notable is because there was not Bazooka Joe action around. Options were different then. When you saw like a couple $1 million in sweeps back then, that was Bazooka Joe. We see Bazooka Joe in hood every day. You realize that? We see Bazooka Joe every day in hood alone, just hood. I was just talking to a buddy about Bazooka Joe recently. Like Bazooka Joe, and for those of you who don't know what we're talking about, out of the 2016 correction, the market, we were in a correction, felt like we were going to go down every day. And all of a sudden, big sweeper came in and swept like 3 million of Apple, swept the Qs, swept SPY, maybe 10 million when it was all said and done. Maybe a little bit more, but around there. Okay. Back then, in 2016, it was like he got the nickname Bazooka Joe, fired a bazooka. It stood out like a sore thumb. Now, you see that action, right? It's like nothing now. NVIDIA, Tesla, when these things get hot, you see $50 million in sweeps. Yeah, I mean, it literally marked the lows of that 2016 correction. You know, it was pretty crazy. It was pretty crazy. But now it's just the option market's become so popular now. It's just so much activity there. It's insane. Insane. All right, my friends. I got to wrap it up here. Always a pleasure, though. Always a pleasure. You guys know I love talking to you guys. All right. Enjoy the rest of your Thursday night. Later, T, Sahil, Struck, everybody, Madden. I'll see you guys mañana. All right. Be good, guys.